it pre-rallies. It rallies on the results of its 10 biggest customers, which we hear from weeks before they actually get a chance to report. And as such, the most important number each quarter is not top line sales, is not the earnings per share. The most important number is always the guide. And the guide was ahead of expectations by 4 or 5 billion. That's all we need. And I think that, look, you don't get plus 10 points in the stock after, because look at the rally from April into now. Basically, you had a stock sitting at 170 that nobody wanted, and now here we are, 220. That's the equivalent of a $17 stock running to 22, ahead of the number. Now you got the number that at least justifies the rally we've already had. I think it's a day or two of digestion, and then this thing could take off all over again. Not saying it will, saying very likely in my view. And so you want to sell a stock trading 18 times forward earnings? That's telling you they're going to grow earnings 83% in the next 12 months. You could
his earnings, the SpaceX S1. We'll do Nvidia first for obvious reasons. There were many highlights. You can pick whichever one you want. Revenue's up 85% year on year. The guide was good. The buyback of $80 billion. They raised the dividend. The data center revenue almost doubling. We knew it was going to be good. It was. We knew the stock wasn't likely to do all that much right after. It hasn't. Well, the stock's moved a lot. It's up 10% into the number. What do you make of what you got and what it means now?
I still think it's going to 250. Nvidia is not a great post-earnings reaction stock because, as we've talked about,
we have in our LLM optimization tool to bring together the industry's first trusted solution to understand what's happening in AI, to be able to improve, take action, and then also be able to benchmark it to see how these increases in brand visibility impact things such as your marketing pipeline as well as the revenue.
And I'm so fascinated by this concept of visibility alongside machine readability, which were terms I was not expecting to be talking about, but so important as you break it all down. I mean, as I look at this, machine readability, and you mentioned people playing with ChatGPT or whatever their preferred LLM is to plan their summer travel. When you think about it, we don't actually think through the process of how these LLMs go about choosing the results that they're giving us. When I type in, I want to go to Disney, what's the best itinerary, where should I stay, and which parks do I visit? But there are some very important things about remembering that a robot is doing the search for me. So break down this relationship between brand visibility and machine readability and how it has become so important now to not be search engine optimized, but to be optimized for these LLMs to read your content instead.
Yes, Marley, we think about this and we advise clients in 4 categories around brand visibility. And you touched on the first most fundamental thing, which is brand discoverability. Can AI actually find the content on your website? So your website now has become not just for humans, but for AI. And a lot of the content, 80% of the brands we work with, their content that's optimized for humans, they're not optimized for readability for AI. So what Adobe Brand Visibility does is it goes in and it does an audit of this and makes sure that all of that great content is visible to AI. That's brand discoverability. Then there's brand clarity. The brands we work with, they have multiple products, services that targeted at different groups, maybe family travel, maybe luxury travel, business travel. So being able to also make sure content is legible and readable by these AI agents, and they understand what products and services to recommend the different categories and target audiences in the conversations. Third is brand authority. We talk about the website, but we know that these AI agents search across the entire internet. So being able to not only understand how your own content is feeding in, but for these AI agents, what key sites, what key authoritative third-party places are they going to get that information? And it differs by industry, it differs by different subsegment. And that's the kind of information we're able to provide with Adobe Brand Visibility. And finally, brand trust. We talked in the era of social about social influencers. They were people. Now it's about how do you make AI your #1 influencer around your brand? So does AI trust your brand? And why this is a C-level imperative is because all of those signals, including the ones with humans, feed into what we call, and we know, on your balance sheet, which is brand equity, right? And that intangible aspect about brand, whether it's preferred, whether it's trusted, and that accumulates over time. And in this crazy complex world, I mean, think about your summer travel. Think about the last thing you purchased. Inundated with choices. How do you decide? You decide based on the accumulation of brand preference that you have, as well as what AI is now telling you.
So let's look at the trends that you're seeing and who's doing this well and who isn't. What areas are we seeing perform well when they're going into an LLM and being tossed out to the search to me, the consumer, and what areas are really still struggling?
So I think that the area that companies are starting to become aware of is branded search terms. So the companies we work with, they have a greater understanding of, I want to put in my brand and understand how LLMs are talking about what's the general.
Nvidia just got another massive bullish signal. If there was any doubt that the AI infrastructure build-out is slowing down, Micron earnings call just answered that question. And the answer was very clear. Demand isn't slowing. In fact, according to Micron management, the AI memory market remains supply constrained well beyond the 2027. That statement has alone huge implication, not just for Micron, but for Nvidia and the entire AI ecosystem. The compute shortage is still real. For the past years, many investors have worried that AI spending would eventually slow down. Some believed hyperscalers would reduce capital expenditure. Others expected demand to normalize after the first wave of AI investment. But that's simply not what companies are telling us. Alphabet has reportedly said it's remain the compute constant. Micron continue expanding AI infrastructure and Meta keep increasing capital spending. Amazon continue building new AI data centers and Oracle is accelerating cloud expansion. And now Micron has confirmed that memory demand remain far ahead of available supply. These aren't the opinion, these are the statements directly from the companies building AI infrastructure. Memory is becoming one of the most valuable part of the AI. Several years ago, GPUs received almost all of the attention. Today, that's no longer enough. Every new AI models require more memory, and every reasoning models require larger memory capacity, and every inferences workload need faster data movement. Without high bandwidth memory, even with the fastest GPUs become bottlenecked. That's why HBM has become one of the most valuable components inside every AI servers. And that's exactly why Micron pricing power has increased so dramatically. Nvidia roadmap keep getting stronger. Another important takeaway is that Micron confirmed HBM4 production is already ramping for its lead customers. That lead customer is Nvidia. HBM4 powers Nvidia Vera Rubin platform. Micron has also confirmed that the HBM4 4E development remains on schedule for Rubin Ultra. This matters because Nvidia product roadmap now stretches several years in the future. Blackwell Ultra, Rubin Ultra, and eventually Phenix. Each generation increases compute performance. Each generation requires significantly more memory, and that's create a powerful growth cycle for both Nvidia and the Micron. Long-term contracts change everything. Historically, investors viewed memory companies as unpredictable. Strong years were usually followed by sharp decline. But today market look very different. Micron has now secured multiple 5-year strategic agreement with customers. These aren't quarterly purchase orders. These are the long-term commitments that provide visibility into the future revenue while reducing the uncertainty that traditionally surrounded the memory business. It's one of the biggest structural change we've seen in this industry. Why investors should pay attention? One point that management repeated several times stood out to me. The company expects demand to remain extremely strong because AI adoption is still in its early stages. Think about where AI is today. Most businesses are only beginning to deploy AI assistants. Agentic AI is still in the infancy. Physical AI hasn't reached mass adoption, and humanoid robots are the only starting commercial deployment. Industrial automation powered by the AI is still developing, and if demand already exceeds the supply today, imagine what's happened as these technologies become a mainstream.